But again, let's talk about the banking and insurance side. And that's the reason why Omoefe Eromosele is actually here from Afrinvest. Okay, so good morning once again. I think we're done with the Valentine's story. But again, what's the big story here for the banks and insurance? What's spurring this latest rally that we saw last week? That was a massive 8.1% for banks. And if you add their cousins, the insurance, that's giving you north of 12% in just a week. That's huge.
Yeah, so expectedly, when you have, a rally, most of the stocks that will receive the first buying interest, are usually banking stocks. And that's not surprising because, when you talk about fundamentals, if you look at the fundamentals of bank over the period, it has constantly shown, a resilience, even in 2016 when there was a recession, and in 2017, even when, economic growth was still, picked up and was still weak and still fragile, we've still seen positive performances in terms of profitability, in terms of earnings. And apart from fundamental analysis, then you go to look at, liquidity of the stocks on the banking, on banking stocks. So those two metrics are are the things that usually spur investors to first of all position in banking stocks. So if you even look at the pricing in terms of what are banking stocks compared to other pairs in the frontier market and emerging market, you see that in the past in 2018 to 2019, the pricing has dropped relatively to other pairs. So it's more like cheap assets, strong fundamentals, and usually that's usually a good entry opportunity for investors. So for banking stocks, yes. But if you look at insurance stocks, on the other hand, we still have some good players, in that particular sector. Even though we are a bit conservative of performance of the sector as a whole. But if you look at players in the sector that have had relatively higher ROE, that's return on equity above average, industry average, where you have Mansard, you have Name, you have Custodian. You still see when there's a rally like this, most investors will usually rally in those stocks, and those are the stocks that usually drive the performance of the insurance.
Yes, the insurance sector recapitalization program was terminated. But again, if you look at the landscape for insurance, it looks like some things are changing. For example, you've seen a few international names coming in, following in the footsteps of AXA Mansard. So you find a few. Do you think that could be one reason why folks are taking a second look at this sector as well? Because you drive around now, you're going to see some foreign names.
Well, I like to say not so much. Let's say it's a 50-50 thing. So 50% in the sense that foreign investors see that the companies, some companies in the insurance sectors, are positioned to actually, grow. If you look at the potentials of the sector, if you look at what would usually drive, insurance, the middle class, growing middle class, our population in terms of life insurance, and then for non-life insurance, when the economy is growing, what you see most likely, most businesses, would increase insurance and all of that. So yes, the potentials are still there. But for 50% on the flip side, we're looking at, what is the structure of the sector. So we're saying the recapitalization exercise would have been good enough to increase, their capacity to underwrite, big ticket transactions. When you talk about oil and gas, so we still have, flights, premium flights in those, particular sectors that, that are big ticket, heavy transactions, oil and gas, marine, aviation. So while there are still potentials, we believe that, the structure still has to change. And when we look at regulation, we're kind of, a bit not particularly happy with the regulation, the regulatory body, of the insurance sector, NICOM. When we look at NICOM compared to CBN, we believe that NICOM, it hasn't been as strong, or hasn't, like the CBN.
Hasn't been on ground, not even as the SEC. Not even as strong as the SEC, if you ask me. And words on the street, sometimes behind closed doors, is that NICOM is still tied to the apron of the Ministry of Finance. It's not as independent as you will see the central bank. It's not as you would want it to be, as leading from the front as you see the SEC or the central bank, or even if you look at telecom sector, for example. So folks believe that, yes, there's still need to get NICOM, National Insurance Commission, out of the Ministry of Finance and let it become a whole. But that's a different conversation. For another day, because a few things we've heard, and I've heard on the ground, wasn't really comforting for me as a business journalist, looking at the fact that the NICOM can't take certain decisions, as the central bank will be on the ground and hit the ground, do all of this, as you would see. So NICOM is a bit lay back because of this. But this legislative issue.
I wouldn't like to say laid back, but I think I'd rather call it weak, because what we have is they come up with, with a particular idea, or say, okay, this is what we want to do, or this is what we need to do. And then twice, in 2018, we've seen them retract. Yes, back down. Yes. And then, players go to court, and then all of a sudden we see that these reforms that would have been necessary for, the growth of the sector, have taken back, taking back. I
know, as I said, it's a conversation for another, but let's talk about earnings. When do you see the big earnings coming through for banks and insurance? Do you think investors are already buying into that?
Oh, yes, sure. As I said earlier, the pricing of stocks are really cheap now, especially for banking stocks. And the outlook on earnings is positive. So what I mean by positive, we still expect profitability. Although, we think that what will happen is there will be some sort of moderate growth. Looking through H1 2018 numbers, 9 months 2018 numbers, what we're expecting for full year 2018 will be some sort of moderate growth. Why do I say moderate growth? So if you look at earnings, if you look at, if you decompose earnings and you say, okay, let's look at interest income, what are we seeing? So creation of risk assets, we've seen a decline across tier 1 banks, across most of the banks, a decline in creation of assets, so loans. But what we're expecting is that investment securities, so interest income from investment securities, will kind of buoy that line. For most banks, what would also support their growth is cost efficiency. So some look for cost efficiency, and then when you look at credit impairment charges, there's been a decline because they've taken provisions earlier. So yeah, not too high, but still positive. Still positive about profitability.
We'll be in line with 2017.
Yes, slightly in line with 2017. But still an upward trend, but moderate growth really.
Okay, great one. Let's check in maybe in a few days or a week time when some of these numbers start coming through.
Yeah, we were expecting numbers, and so we're watching out.
I know. Thank you. Omoefe Eromosele, one of the research analyst team at Afrinvest. When we come back after the break, the stock market yesterday met, well, some of you might be in some religious services yesterday when the market was met with a few government officials and had to say something about the elections. What is this, or what was that all about yesterday evening? We'll talk about that after the break.